I'm Bob Diamond, America's tax sale attorney, your friendly guide to the intricacies of the American tax system. Taxes are essential for funding government operations, everything from local police, fire, schools, to national highways, national defense, and even regulatory agencies like the SEC, the EPA, and more. Now, there are various types of taxes that can help organize your understanding. First, we have income taxes. Income taxes are taxes paid on the income earned by individuals. Typically think of it as job income for most people. Also, there are income taxes on businesses, but what I'm going to talk about covers both. We also have taxes on the gain from the sale of investment assets, such as stocks and bonds, and interest also. So pretty much anything that you gain in terms of cash from either trading a security, from interest, from income, from a business that you own, those are all taxed as income tax. And the taxes on assets such as stocks and bonds, those are called capital gains taxes. And there's usually taxed at two different rates depending on how long you had the investment. If the investment was held for less than a year, then it's taxed at what they call a short-term capital gains rate, which is the higher rate, usually the same as the income tax rate. But if you held the asset for more than a year, then the rate is called a long-term capital gains rate, and that's typically at a lower rate than the short-term capital gains rate. Typical, the long-term capital gains rate, although it varies depending on how much money you make, typically about 25%. The majority of income and capital gains taxes are collected by the federal government, but most states also have an income tax. And plus, because 17 states allow local government to assess income tax, some municipalities also charge an income tax. Now that's generally a pretty low percentage, but in some cities they charge income taxes that at pretty high rates. And by that I mean for a local or city income tax above 3%. Examples of that include Baltimore, New York City, and Philadelphia. Now the only states that don't have an income tax are Florida, Wyoming, Delaware, Alaska, Nevada, South Dakota, Texas, and Washington, as well as New Hampshire and Tennessee, which don't have an income tax, but New Hampshire and Tennessee do tax interest and dividends, although they're supposed to phase those out by 2025. It's not 2025 yet, so who knows what's going to happen. But the big taxes are federal income taxes. Now those rates can go as high as 37%. And the actual federal rates, well, they legally range from 10% to 37%, and they're calculated using what they call progressive tax rates. That means that the more money you make, the higher the tax rate is on the income that you make. Now, your actual federal tax bill is very much influenced by the deductions and credits that you have. So in reality, people making $40,000 or less don't actually pay income taxes, even though if you look at the rate, it would say that they pay 10%. But in the end, they get credits and things like that where they don't actually end up paying income taxes. And people at the top end, meaning people that make more than $1 million a year, aren't actually paying 37% income tax. They're typically paying around 25% of their income in taxes. I know this is a little confusing, but the tax system in the United States is confusing and fiendishly difficult. So I do want to tell you the bottom line: people making less than $40,000 a year typically paying no federal income tax. People making $1 million a year or more are typically paying 25% income tax. So that's kind of the realistic range, 10 to 25%. Even though the top marginal tax rate is 37%, people don't actually pay that. So it's probably beyond where I want to go for today. But let's talk about state and local governments. Now, they get their funding more from sales taxes and real estate taxes. And sales taxes are, of course, what you pay when you go to a store and buy something. And the sales taxes are mostly collected at the state level and typically are in what I would call the mid-single digits, meaning 4, 5, or 6%. The highest state sales tax is in California, which is at 7.25%. And there are 5 states that don't have any sales tax. Those states are Alaska, Delaware, Montana, New Hampshire, and Oregon. Now you may notice that Alaska, Delaware, and New Hampshire are 3 of the states that also don't charge an income tax. So that's interesting, I think, in and of itself. But sales tax for most states serve as a major income stream for the state government. And also sometimes for local municipalities if they've assessed their own sales tax. And those are used to fund operations. The ones with the municipalities are generally small percentage-wise, typically low single digits, with Alabama being the highest. And local municipalities charge, on average, 5.25%, although it varies by municipality, but the average across the state of Alabama is 5.25%, and that's in addition to the state Alabama sales tax rate, which is 4%. So the sales taxes go to basically fund state operations and to a lesser degree, local operations. Local operations are more typically funded by real estate taxes. And the biggest recipient of those taxes is the schools, local schools, as well as essential services like police and fire, road repair, and all that stuff. And although all local service providers and governments do receive part of the real estate taxes, the real estate tax, although many departments in a local municipality receive revenue from real estate taxes, the big gorilla in the room for that is the school taxes. And the schools are very expensive, and they're probably the biggest single cost for most municipalities. And so they're very serious about collecting those real estate taxes because they have to pay for the schools, because they have to provide schooling, and the real estate tax is the primary funder of that. So they are dead serious about collecting those taxes. As a result of that, if you don't pay your real estate taxes, the local government will sell your property at a tax deed auction. And they'll do that so that they get the money for the taxes out of the proceeds of that auction. Now, in addition to those taxes, there are also federal payroll taxes, and those are used to fund national programs like Social Security and Medicare. And those payroll taxes are directly deducted from wages. And payroll taxes are a percentage of earnings, and they are paid both by employees and employers. Typically, they're splitting them half each. And now that we've covered the types of taxes, let's delve into some key concepts that will help you navigate the American tax system like a seasoned pro. First of all, filing taxes accurately and on time is really important. It's important to stay compliant because you have to avoid the really significant penalties that they assess if you don't do it correctly. And the federal government has the IRS, which stands for the Internal Revenue Service, and that collects the federal taxes. And the IRS sets specific deadlines for different types of taxpayers to both pay and file their tax returns. Pay their taxes and file their tax returns. And of course, extensions are available to file returns in most cases, but you do need to pay the actual taxes due on time, or you get walloped with absolutely enormous penalties. So to stay on top of your finances, it's vital to keep track of taxable income, deductible expenses, and to keep collecting that data over the course of the year, and to deposit estimated taxes each quarter with the federal government. And when you do those quarterly deposits, it's best to overpay a little bit, and then when you file your return, you'll get a refund of the overpayment. And that way you could avoid being penalized for not depositing enough each quarter. And of course, deductions and credits do reduce your taxes, and knowing what's available helps you to save money, meaning knowing what deductions and credits are available. For example, business owners can have their own private pension plans where they can set aside money prior to paying taxes on it for their retirement. Now, taxpayers who don't own a business also have options. They can set aside money in an IRA, which stands for Investment Retirement Account, where they don't have to pay tax on that money in the year that they earn the money, but they are going to pay the taxes later when they retire and start drawing out the funds, but hopefully they'll be at a lower tax rate at that time. And of course, when you can put more money in because you didn't have to pay taxes on it first, the money can grow more over time, so it's generally advantageous to pay the taxes later. And there are even investment retirement accounts called Roth IRAs, where you deposit money after you pay the taxes, and then the money grows through hopefully interest and dividends and good investments. And then when you withdraw the money, you don't actually have to pay taxes on the gains. So Roth can be really interesting for a person who's an employee. Insiders refer to Roths as you pay tax on the seed, but not on the fruit of the investment. So you pay tax on the seed, but not on the tree. And of course, the seed's much smaller, so the taxes are much smaller. And there's even a way that you can make $500,000 in profit on the sale of your house and legally and ethically not pay taxes on that profit. Probably the only way you can make $500,000 and legally not pay taxes in the United States is with selling your own house. The tax system is complex, and I would say it's fiendishly complex, and there are many options to legally minimize your taxes. And it's important that you work with a talented and knowledgeable CPA or tax attorney who can help you legally minimize your tax bill. And of course, you can minimize that bill and maximize your retirement savings, especially with smart tax planning. So spend time identifying and then working with a talented tax planner, and you will benefit big time. And of course, because the penalties are very high for not complying with tax laws, keep accurate records. Report all your income and double check deductions. Make sure you took the ones you're entitled to, but not ones you're not entitled to, because if they catch you taking ones you're not entitled to, it gets very, very expensive very quickly. So take what you are entitled to, but not more. And if you are audited, which is the way that they check if you pay the taxes properly, and they don't audit that many people, but if you are audited, my advice to you is immediately turn that matter over to an experienced tax attorney or CPA who's used to dealing with the IRS. Otherwise, you can end up paying interest and penalties that you really don't need to pay, but you do not want to be the one trying to take on the IRS by yourself. You are on an unlevel playing field. They know you don't, and it's their job to collect taxes, so you want to make sure that you're being represented properly. An example of that happened to me. Just last month, I received a letter from the state of Pennsylvania that I owed them $65,000 in taxes. Now, I was really surprised by that because I don't live in Pennsylvania. I moved out of Pennsylvania many years ago. So I was really mystified as, why are they sending me a tax bill? I don't understand. So I contacted my tax attorney and set him loose to figure out the issue. He immediately saw that my CPA, the guy who prepared my taxes, had made a mistake on my tax return. And that mistake, just entering something in the wrong line, caused Pennsylvania to think that I owed them taxes to the tune of $65,000. That's a lot of money. So the tax attorney told the CPA how to correct the return. He also sent a letter to the state of Pennsylvania explaining the mistake. So after the amended return was filed, the issue was resolved. No tax bill. I didn't have to pay him $65,000. No money was due. So it's important, I tell you some personal experience, get good representation, and of course, file your taxes honestly. Because I was so surprised because I do file my taxes honestly, so I thought this has got to be some mistake somewhere. And although the American tax system is fiendishly complex, for people who are employees, the tax system works pretty easily and mostly in the background, and it's not complex to comply with. They deduct the estimated tax bill throughout the year from each paycheck, and then you fill in a pretty simple tax form in the end, and you typically get a refund. So that's pretty easy. But for business owners, it's much more complicated. But thankfully, the issues are well understood by the professionals who deal with them, meaning attorneys and CPAs. And as long as you locate and retain and work with competent professionals, you can comply with your tax obligations pretty easily. Of course, it's not free, it costs money, but it's also not that much work if you use professionals. And where I've seen people have issues is when they're new to owning a business, don't have a system to keep track of expenses, and don't have a way to keep track of their taxable business income, and where since they don't even track it, they don't set aside the money throughout the year to pay the taxes when their taxes are actually calculated. And of course, in America, we pay taxes in arrears, meaning we'll pay taxes in 2023, typically in April, for money we earned in tax year 2022, which is typically January 1st through December 31st. So the problem can be really significant for a new business that had great success in its first year, made high sales, made bid income, made high sales and great income. But if the business owner failed to make quarterly deposits and they didn't save the money to pay the taxes when the tax bill came, they're really in big trouble. So it's important that when you're making money, you let your CPA know and they tell you how much to deposit and help you to deposit that money so that when they do the taxes the following year, you're in good shape. You have the money, it's already been deposited, and then you can just file your taxes. So especially if you're new in business, get some help setting up your systems to keep track of your business income and expenses, calculating and making your quarterly tax deposits, and thus avoiding what I would call the business success trap. Now you're successful, but then you get a nasty surprise the following April. And this happens to new business people who are successful, not to a business where you're not making money. You don't need to worry about it too much. You're not going to owe taxes if you're not making money. And also, before you even have a CPA or bookkeeper, when you're first setting up your business and trying it out, make sure you at least, at a minimum, have a separate checking account that you use for business and a separate credit card that you're going to use for business only. Even if that credit card is in your own name at first, even if the checking account, your own name at the beginning, you don't even have an LLC or a corporation, at least you know that the income going into that bank account and the expenses coming through that credit card are business expenses. And of course, as you go through the year, download your deposits and your expenses into accounting software such as QuickBooks or Quicken, so at least the transactions are being captured as you go along. And my suggestion, if you don't have any professional advice at the beginning, is set aside a third of your business income for potential taxes. Just deposit it in a savings account so you have it until you have a CPA and a bookkeeper on board to help you determine and make the quarterly deposits. So hopefully you found this helpful and useful. I'm investor and attorney Bob Diamond. I have a lot of experience with small business as well as tax liens, tax deeds, and an amazing business that I call overages. I love the overages business, and because a small operator with a moderate amount of training just using the phone and the internet can build a powerful and profitable business. If you're interested in learning about the overages business, about tax deed sales and tax lien sales, I have a free mini course for you. You can get it now for free, no obligation, by using the link in the description below, and I'll share more information so you can be educated about overages, about tax deeds, and tax liens. This is America's tax sale attorney, Bob Diamond, wishing you a great day. Go get the free course and enjoy it.